Hello and Fun Fact Friday. Today we have facts and myths about credit and what to have or what not to do with credit when you are looking to buy a home. We're with Jim Harmelink with Hunt Mortgage, and he's going to give us some information that's important for both first-time home buyers and previously have owned home buyers, and what to look out for or be aware of during that buying process. So the first step first.
Well, when it comes to facts and myths, I guess one of the myths is maybe you have to have perfect credit. You don't necessarily have to have perfect credit, but do need to demonstrate to a bank that you can pay your bills on time. That's what the credit report is telling a bank. When you ask for a loan, you're going to tell them, yes, I can repay my bills. Here's my credit report. If you don't have established credit on a credit report, a lender most likely will try to find a way to prove that you can repay your debts, to maybe talking to a landlord, talking to utility companies, credit card, or maybe insurance companies to make sure you can repay your debts. So that's part of the buying process from a bank, to make sure you can prove you can repay your bills.
Yeah, and this is always kind of the first step when looking into
Correct.
the purchase process.
Yep. So people need to pay attention to their credit score, credit report. There is the Credit Karmas out there that does give a credit score, and it's a good way to pay attention to what is on your credit report. A lot of times that's not going to be the exact same score that a mortgage lender will use. There's a different formula that they use, but it's at least a good way to kind of pay attention to what's happening to your credit report. When it comes to the credit score, if you do have established credit and are trying to find ways to maybe improve it, I've definitely seen many home buyers that might not have the perfect score, even though they've never missed any type of a payment at all, and that is because of revolving debt. Revolving is your credit card debt. If you have a high balance to the limit, that can hurt your credit score, much as if you maybe even missed a couple payments. And the thresholds are, if you owe more than 70% of the limit. So for example, if your limit is $10,000 and you owe more than $7,000, your credit score is going to be hurt because you have such a high balance on your credit card.
Okay.
Now, the magic number to get the best score is below 30%. So again, your 10,000 limit, if it's below 3,000, that'll give you the best opportunity for your credit score. And another kind of trick with this is the credit card companies, because I will have customers say, sure, I put everything on my credit card to earn mileage or different types of rewards. That's fine. But when the credit card company sends you the monthly statement, that's when they send the credit card company the balance. The credit card companies don't update the balance on the credit report daily. They do it once a month when they send you your bill. So a trick could be to try to pay it down or off before you even get that bill, and maybe that bill will be low or zero when it comes. That's the balance that the credit report is going to see. So
That's more beneficial on your score.
Yeah.
That is a good trick. You've mentioned a couple of times the credit score and the credit report. So for people kind of unfamiliar with those terms, what are the difference between the two?
Yeah, the credit score basically reads your credit report, and it gives the bank or the investor a score on how likely you are to repay your debt.
Okay.
Now again, that score doesn't need to be perfect, but with some loans, mortgages, the higher the score, the lower your interest rate can be. So it can be important to try to get the best score possible. A conventional loan can be a little bit more picky on that score than an FHA or VA. FHA, VA, aren't quite as picky on that score. You can still get an amazing rate and have some blemishes on your credit. Yeah.
Okay. And then their credit report is essentially
Credit
documentation of.
Yeah, credit report will show, your payment history.
Okay.
So so to speak. Yeah.
Perfect.
Anything
Well,
else?
lots of great credit information. Again, kind of going back to that revolving credit as well. I think that is, if you utilize it properly, the trick with that. I think it's huge to help buyers in.
And I do have a
that
fun
process.
tool that if somebody is trying to figure out, hey, what's wrong? Why is my score not as high as I want it to be? I've got a fun tool that the credit reporting services allow me to have. It's a what if scenario that I can say, okay, here's your credit report. What does this buyer need to do to have a different credit score? And it'll give me the tools, pay this down, pay this off. Maybe even I've even seen open a new small credit card, use it sparingly, wait 90 days, whatever. It'll give me a blueprint on what we need to do to improve that score. So I do have that nice little tool in my tool belt.
Nice. And when you improve your score, you increase your buying power,
Exactly.
which all comes beautifully, full circle. Well, Fun Fact Friday with Jim Harmelink. And again, especially with this credit tool to kind of figure out and see where you may be with your buying power and your buying purchases and the processes, we'll go ahead and stick his information down below. If there's any questions about the credit or where you may be personally standing in the buying process with your credit, please feel free to reach out to him and he can answer all of your questions. Thanks, Jim.